Good afternoon, traders. You're all very welcome to Thursday's US market update, where we look at the key themes and developments in the markets. Obviously, today tends to be traditionally the busier day of the week. So today we've had a lot of volatility. We've had a lot of data out in the last hour, particularly at 1:30. We've seen significant volatility in the last hour or so into US session open. So of course, we'll be looking at that shortly. So first things first today is obviously leading into US Open. We're of course going to be looking at the data, the economic data today. And of course, as I said, at 1:30 p.m. today, we have had significant movement in the markets. Now, broader GDP, US data has come in higher than expected. Although you have to also look at some of the other key developments today as well. So if we just hone in on today's data, firstly and foremost, you can see that today, as I said, at 1:30 p.m., we've had GDP outlook out, or GDP figures out. We've had initial jobless claims. We've had PCE, personal consumption expenditure, and core PCE as well, which is core PCE data as well. So the core personal consumption expenditures has come out higher than expected, 5% on the core for Q on Q, ahead of 4.9. So that's coming in marginally higher than expected. The personal consumption is coming in pretty much as expected. However, the upside really today is in the growth. Okay, so Q on Q, gross domestic product annualized, should I say, is coming in at 1.3 instead of 1.1. And of course, the broader price index is also coming in slightly higher than expected. So price index, you can call it what you will from it, but we have seen some fairly decent moves in the markets. Now, in addition to today's data at 1:30, you also have to look at kind of what the general sentiment in the markets has been this week. So the broader theme of we talked about last week, and obviously this week and the week prior to last week, we have seen significant dollar movement, right? So we've seen consistent risk orientation in the FX markets out of other assets into dollar safety. And of course, the big mantra to that is the fact that the dollar index, as we talked about yesterday, is still very much pushing higher, right? You look at your intraday levels, you look at your higher time frame price action flow, DXY is still continuing to churn and present upside progression. So that obviously means that in the underlying markets, within the sentiment analysis, within broader fundamentals, there is a very, very clear outlook. Excuse me. There's a very, very clear outlook for buying dollars at the minute. And we've only started to see that this week, factoring into other asset classes like gold, which has seen some very, very heavy selling. And of course, earlier this week, Tuesday, we had that break of 2000 to where we actually broke into this kind of weekly, kind of present daily area here around 1950. And today as well on the data, we've actually continued to break through. We've continued to break down to the upside because the dollar strength is still very much bullish and still very much to the upside. And you can even see that within broader price action, right? That massive breakdown on Tuesday, followed by a kind of a 2-day pause. But this afternoon at 1:30, we've broken through the 50 handle and we are moving lower. Now we've broken through the level. We have broken downside. We are pulling back up into this liquidity zone here. So I suppose from a price action perspective, keep a very, very close eye on this 50-60 level here on gold today to see if there is any kind of continuation to the downside. We've broken the liquidity. We've taken sellers into the markets. We're now going back up to that value area. So this value area here on gold today should be very, very important. 55-60 into 58, 59, 60. This broader yellow level should be your focal point to see, are we going to actually push back into that liquidity level, which looks like it's currently doing? And then beyond that, then can we actually continue to elongate and progress to the downside? So it's all about being disciplined in your approach, regardless of what you look for or whatever process that you're following. Okay. Now, if we look at indices as well, obviously with that stronger dollar move to the upside, we've seen obviously Euro USD progress to downside. And I even talked about this yesterday in yesterday's US session open. Keep an eye on this area here, 107.70, 107.80. I said, if this breaks down, you are going to see some fairly decent selling. We saw it into the snap. We saw it in today, and we are trading a very, very clear kind of 60, 70 points lower to the downside in Euro USD. So for a heavy volume and heavy liquid asset like Euro dollar, 70-point move is quite significant in less than 24 hours. So you just have to be kind of wary of broader dynamics within these markets. Same again applies to cable. We've seen cable progress lower through the course of the week. We have seen dollar yen on the other side progress very much to the upside. So you're very clear, anonymous, to say that dollar strength is very much in the markets at the minute. So it's just a case of understanding trend, sentiment, and being able to have a coordinated structure in terms of entry into these markets. If you don't have a coordinated structure, you're going to find it very, very difficult, and you'll probably get chopped out a few times. So it's all about having that structure. Now, when you look at the indices, so indices has found a little bit of a bottom yesterday, of course, into today's US session. But when you look at broader dynamics in the week, we have seen some fairly decent sell-offs. We've seen sell-offs from 4,200 all the way back down into 41. So that's a kind of a modest 2% sell-off from peak to trough. Now, we have pulled back on some of those losses, but there is still downside in the indices this week. And we're back into this value area here, as we said, around 4,100. Now, 4,100 has been the fulcrum point last week. We saw some fairly strong buying out of this region last week. In a couple of days, we're all the way back down to said value area. Now, I suppose into today, the busier, as I said, busier trading day of the week, followed by the weekend tomorrow, it's all about ascertaining to see whether the actual sentiment of bearishness in the indices really continues to the downside. So having that clarity is really, really important as well. Okay, so that's kind of where we are in the S&Ps. If we look at NAS, so NAS has been very, very interesting because it's kind of been contrarian. Because of course, last week we talked about the NASDAQ, those heavy sell-offs, those heavy dips, those heavy retracements. We were looking to see kind of, is that selling in the NAS actually being residual? Is it continuing? Is it being implemented? And is it going to be consistent with downside progression? Now, Tuesday, Wednesday, into late last night, we've had some fairly significant moves. Now, the NVIDIA outperformance by 11% has definitely helped the NAS because of course, NVIDIA does hold a share in the NAS weightings. But broader dynamics in the NAS has actually recovered back into those session highs. So that is a very, very clear 400-point sell-off in the NAS in just a couple of days, followed by a 400 immediate rally between late last night into session close and of course into US Open today. So you're seeing those 2 to 3% swings in some of those heavier risk-orientated stock market indices. And it's important to be relevant of how risky or what is the risk application applied to those assets to then being able to calculate your own risk, right? Calculate your own size to say, well, if NASDAQ is moving at 1-2% average daily moves, well, then I need to reduce my size. I need to reduce my size, bring my position sizing down to give myself a little bit more breathing room in some of the size of my stops. So simple things like that helps to traders to really coordinate that risk plan above all else. And we've seen that as well in Europe as well. We've seen it in the Dow Jones, very, very heavy selling all week. And we talked about this 33,000 level. Since then, we're trading another 300 points lower from where we were yesterday. We talked about it yesterday. If we break through 33,000, you can really see some of that downside pressure because we've all of this liquidity, all of this movement in the markets from March to really try and look at cleaning out. Now, as I said today, we're 300 points lower. But of course, we could very easily find ourselves back up at 33,000 by the end of the day. So let's just see how market dynamic principle opens up into 2:30, into 3 o'clock, where we can start to get some decent intraday bias in terms of broader directional movements. Okay. Now, as I said lastly as well, in the FTSE in the UK, European indices have been absolutely hammered, right? The FTSE has been hammered yesterday off, of course, the UK CPI. But if you look at the narratives, you look at the media, you look at the news, yes, that's absolutely integral. And you saw that yesterday from 7-8 o'clock with the CPI figures coming out right through into London Open yesterday, and into US Open. But even before that, right, the selling in the FTSE this week wasn't primarily situated around the UK CPI yesterday morning. It did in fact actually start on Tuesday. We had that break. That selling started to come in Tuesday morning, Tuesday afternoon, and it only became even more elongated and continued Wednesday off the back of that CPI. And obviously with the bearish CPI numbers, we saw FTSE tank, we saw the pound rally, and we talked about that yesterday in the Zoom. So understanding these correlations, understanding how data moves markets is also important because that can align with your strategy, or it'll help to give you patience in terms of, well, I'm going to hold off, I'm going to wait just to navigate around the volatility, and then you can make trading decisions. Okay. And that's really, really, really important. Lastly, Dennis, I suppose before we look at the market profiles, we've seen the DAX as well. We've seen DAX massively sell off back into this value area. And as I said, short term, it's all eyes to see how does the market dynamic react here between 15,700, 15,800. And we are sitting above this value area, but we just need to see if there's any sort of significant reaction. I think Thursday into Friday will be very, very important to see whether we see indices sell off again. And if we see indices sell off again, those European assets that were hit very, very heavily, really from the start of the week or the beginning of the week, from Monday, Tuesday, and so on, is really, really going to become very, very important to see whether we do close lower on the week. And you look at DAX on the weekly so far, we are trading significantly lower. Okay, we're trading almost, what are we talking? We opened up 248 on the DAX. We're now sitting at 530, right? So you're sitting all of over 400 points lower in the DAX, which is again on the week 3.5% swing in price action. So the volatility is definitely there, but it's on both sides. We saw it last week on the upside We're seeing it this week back into those value areas and back in on the downside. Same again on the Euro stocks before we move to market profiles. You can see it as well very, very clearly. That strengthening move that we talked about in the Euro stocks for the last number of weeks very, very quickly became undone on Friday. And as I said on Monday, very clear selling from under 43.80 all the way back down to 42.40. That's a 140-point move in the Euro stocks in 4 days, which is, again, you're sitting at that 3.5% barometer declines for the week. So it's important to have focus on that. Now, as we look to 230, we are seeing obviously indices pulling back a little bit. Now, NASDAQ is the anomaly because, of course, it's still holding up relatively well, although we are seeing initial selling at 230. S&Ps has seen a fairly decent dead cat bounce recovery since yesterday evening, so short-term recovery or dip rally in the face of last night's close, but we are seeing selling coming in at 230 as well. So S&Ps is definitely off into the open. NASDAQ is starting to see some residual selling in the last half an hour or so. We're starting to see topping out again at this area, so it'll be interesting to see if there's any sort of further selling coming through. And as I said, the Dow Jones is also struggling here at this 32,700, and in fact, we've just broken through 700s into today's open. So as I said, it really becomes very, very clear because you had that yesterday, you had that spike just before US Open yesterday, hammered it lower. Same thing again today, a little bit of a rally into US Open, takes the highs of the session and then turns on a sixpence. And those types of simple things can really help to identify and coordinate structure in terms of an entry policy, but in terms of navigating the markets and being able to say, well, I'm expecting this to happen. And then you've got a decision-making process to follow suit along with that. All right. Now, if we look at market profiles, just to finish off for today, as I said, S&Ps has been selling off. So we've kind of created this value area here, really 41.40, 41.35. Now we did, as I said, we did rally initially into 130, but since then we have come back into this value area. Now, if we isolate price action, you can see here, your point of control is at 41.34, pretty much at the area that we're talking about. Now, when we look at D prints, we are coming back through into point of control. So naturally enough, if we take out 41.34, 41.30, the likelihood is you're going to see S&P slip. Right? Why is that? Well, because as I said, when you look at price action, we've coordinated that high, we've taken the highs, we've come back to said value area. And when we take out said value area, which is potentially about to happen, then you're expecting that really to look to continue with that downside bias, and then try and test those structural lows that was formed on yesterday afternoon after the US Open. So that really brings in yesterday's lows, which is again targeting 4,100. So you can get a very nice 30-point move there potentially coming in the S&Ps should we start to see some of these levels give way. So it's just all about being clear, being structured, having a meticulous approach, and then being able to make those decisions afterwards. Same again applies for the Dow Jones. Okay, if we go across to the Dow Jones very, very quickly, you can see that as well. USA 30, very, very clear move higher today and turns on a sixpence. Right, we've rallied up into 800s all the way back down. And in fact, the D Prince is actually taken out the point of control here at 750 and is now looking to take out value lows at 700. And has, if you look at the D Prince, it's taken out 700s and is continuing moving to the downside. So that brings in very clear bearish price action. And a rule of thumb is if you use market profiles, if we are below point of control, you should be looking at bearish sentiment, bearish trending price action. If you are above point of control and above the value area, it's a more positive bullish sign. So it's just about being able to distinguish between those facets, those elements as well. Okay, so that's pretty much where we are at 230, 235 now. We've seen that fairly decent selling. We haven't broken point of control yet in the S&Ps, but we have definitely tried to break through and is sitting very comfortably here at these 650 lows. So it's just becoming a case of whether those sell-offs into 3 o'clock become really more consistent. And a simple thing like that is price action, whereby, well, if we take out 650s, then we can start to see some of these movements slide, which there brings in heightened risk, which means dollar continues to strengthen, Euro USD continues to weaken. You've got that dollar bias, but you've also got that correlation whereby, well, as we know it traditionally, if the dollar is stronger, your indices, your stock markets are generally weaker. So you can apply those correlations in the background as well. All right. So that's pretty much where we are for today, everyone. Really just all eyes on price action today, just to see kind of how this goes. European indices is becoming quite interesting, just to see whether Europe continues moving lower off the back of S&Ps and NAS and Dow Jones, if that continues through the course of the afternoon. So trade safe, build those processes. The best thing I can say now today is build those processes whereby you have certain criteria you look for. being able to implement that into a consistent plan, and then being able to stick to it. Because at least then you're following some sort of process in terms of rules of engagement, but also in terms of entry and exits and trade management within your trading plan as well. All right. Have a good